Super Bowl Sunday. So you know what that means. Each and every year we got to talk about the Super Bowl market indicator, one of those silly little market indicators that financial folks like myself talk about on Super Bowl Sunday. There's another one floating around, courtesy of an article in the Wall Street Journal, that talks about maybe looking at the advertisements that are running during the Super Bowl rather than the outcome of the Super Bowl, and using those advertisements as some type of a contra indicator, if you will. So we'll talk about that. Plus, we'll also give you some practical tips to ponder when planning for death. Remember, none of us is going to get out of here alive. So perhaps spending a little bit of time pondering and thinking about it is a good idea. We're going to have some practical tips for you to get to work on. Maybe do some homework after the game, or if the game's boring, well, then you can kind of do it during the game and then just watch the commercials if you're like most people, I guess. Anyway, welcome to the program. This course is Dollars and Cents, where we help you make sense out of all of life's decisions involving your dollars. Central Florida is the longest running radio program, coming to you on a host of stations throughout the Central Florida region, along with being one of the top 25 financial planning podcasts on the World Wide Web. So make sure you find us, subscribe to us on your favorite podcast platform of choice. Go to our website, Nelson Financial Planning, if you have any trouble locating our channel on your favorite platform. My name is Joel Garris. I'm a certified financial planner, certified financial fiduciary at Nelson Financial Planning, where we got a team of certified financial fiduciaries and others that are part of the team as well that stand ready to help you improve your life with a successful and cost-effective financial plan. So let's begin. Super Bowl Sunday. We got to talk about the Super Bowl indicator. And but before we do that, I want to share a statistic that I saw this past week that really was kind of fascinating, that really underscores the sort of 800-pound gorilla that is the NFL, and to a certain extent, live sports in general. So this statistic comes to us courtesy of the Sports Business Journal. And if you look at the 100 most TV broadcasts in the U.S. in 2022, so the 100 most watched, the biggest amount of eyes on a TV broadcast in the year 2022, of the top 100, 94 were sports related. And for the second straight year, not one single scripted TV show made the top 100. It's kind of amazing, isn't it, when you stop and think about it, how much that medium has changed. NFL games, in fact, made a record 82 of the 100 most watched TV broadcasts in the United States last year. So clearly the NFL is a dominating force in live sports. When it comes to eyeballs, no sport dominates more than football. Interestingly, not a single NBA game or Major League Baseball game actually cracked the top 100. So some interesting stats there about the power of the NFL and football and live sports in general. So some interesting numbers there. On to, of course, the requisite conversation on Super Bowl Sunday, the Super Bowl indicator. And here's what it is. It's been around since the 1970s, sort of discovered or at least attributed to a guy by the name of Leonard Koppett, when he realized up until that point that it had never been wrong in terms of whoever the winner was, it predicted which direction the market was going. This concept, if you will, works like this. If it's a team from the AFC, the American Football Conference, if they win, then it's going to be a bear market or a down market. But if it's a team from the NFC or a team that was in the NFL before the NFL-AFL merger, then it's going to be a bull market or an up market. So I guess that loosely translates to go Eagles, right? I mean, if you're listening to this show and seeking financial advice, I guess the financial advice based upon the Super Bowl indicator is that we should be rooting for the Eagles, because the Eagles from the NFC winds up, if they win, then it winds up being a bull market. Now, of course, as you know, this is a little bit of a tongue-in-cheek exercise, or at least I hope you realize that, because you can't really predict the future. And the Super Bowl indicator, it's got a failure rate of about 30%. It does have a success rate, I guess, of around 70, 75. But the reality is that last year, the Rams won. They're from the NFC, and the market went down. The year before that, the Bucs won. Well, they're from the NFC, and the market went up. So there it was accurate, but then the 2 prior years, it was not accurate. So basically over the past 4 years, it's got like a 1-4 track record. So as with any indicator, it's just fun to talk about, and we like to do that here on the program. The other interesting concept that was suggested in an article in the Wall Street Journal this past week is maybe thinking about the advertisements that we see during the Super Bowl, and if there seems to be a rush or a substantial increase in the topics that these ads are focusing on, maybe that's a good reason to steer clear of what it is, or particularly from an investment perspective, the companies that are advertising, if they're all in sort of the same area or all kind of advertising the same thing, and they are new to the game. We haven't ever seen commercials before. So just a little quiz. What was all the commercials about at last year's Super Bowl? Come on. Fortune favors the brave. Scan this QR code. All of that. The proliferation of cryptocurrency ads was at its peak. A lot of those folks were first-time advertisers. And guess what happened? All of that sort of collapsed. Not unlike what we saw in the year 2000. If you think back to that, I remember that Super Bowl, watching that, and a lot of .com, you remember Pets.com, all of that, they all were running Super Bowl ads. So anytime you see new advertisers to the Super Bowl, and all of those new advertisers happen to be clustered in a particular sector, well, there's your contrary indicator. That one may be, the advertising indicator may be a bit more accurate than the Super Bowl indicator, particularly when it relates to companies that are in the same industry that are advertising for the first time on the Super Bowl. So maybe watch the ads more carefully than who wins. That is for sure. So some interesting stats on the Super Bowl. We hope you enjoy the game tonight, and of course, be safe. When we get back, we're going to talk about much more serious matters here on the program, along with the employee retention credit that's getting a lot of conversation as well. Coming up next here on Dollars and Cents with Joel Garris of Nelson Financial Planning. Maybe you've seen the ads. They're all over the place, but we wanted to spend this segment of the program talking about an ad that's getting a lot of traction, particularly among small business owners. Maybe it's a form of letters. We've got one handy-dandy letter right here. So if you're watching us on YouTube, you see the letter that we are holding up in front of the camera. There it is right there. The reality is that we would certainly urge some caution when these letters are coming to you, or these emails, or even these phone calls, because they sound really good, but as with everything, if it sounds too good to be true, it might very well be. So what are we talking about? We're talking about the employee retention credit, which is a COVID-era tax credit that you got by maintaining employees during the time of COVID, during the time when businesses were getting shut down. And for example, in our case, this letter says that we're going to get $126,000, and the affiliates of this firm, and when you look at the letter, it looks like a pretty formal IRS letter. The affiliates of this firm have reached over 6,000 businesses and helped recover over $1 trillion in tax credits. I guess that underscores just how much money they were throwing around on this COVID thing. If over $1 trillion has been recovered just on employee retention tax credits. But be careful, because a lot of these folks are filing these returns and they're getting charged a steep fee based upon the amount of the refund. And just stop right there. We have significant heartburn with someone who does your tax return and proceeds to charge a percentage of the refund. And stop and think about why that might lead to some issues, right? Isn't there an incentive there to really sort of push the line and get as much refund, whether you're really entitled to it or not? Because then my tax preparation fee goes up. So first and foremost, the strategy of someone doing a tax return and charging based upon the refund, that just smacks of a lot of uncertainty, if you will, or a lot of indigestion, as we like to refer to it as, in terms of how that is actually being done. Number two, it's very likely that you don't qualify. And here's the reason. First of all, here's what the program was all about. So the Employee Retention Credit Program, it was used to incentivize small businesses to keep full-time employees on the payroll during the course of the pandemic instead of laying them off, right? The economy shuts down, the economy severely contracts. You're forced as a business owner to make some hard decisions. The notion of this employee retention credit was that we're going to give you a tax credit as an incentive to retain these folks, because essentially it was a rebate to businesses, reimbursing them for the salaries that they were paying for employees. Now, the reality is that this has all ended, right? After September 30th, 2021, this program stopped. You're not eligible anymore to claim the employee retention credit because you kept people, had people on the payroll last month. It ended September 30th of 2021. But what these ads are all about, and what these ads are really fixating on, is the fact that you can, in fact, file an amended return and claim some of the money that is still out there. Because here's the reality of all of these COVID bills. Much like any other bill, oftentimes, they pass it, there's a lot of money that's thrown into it, and oftentimes it doesn't get all used up. And so there's some unused money here, and that's really what these efforts are all about, is to say, hey, there's some unused money, so let's go ahead and seek it out. The problem is that you might very well not be eligible for it, because you have to meet certain tests, you have to meet certain parameters in terms of business closing, revenue decline. I mean, there's certain factors that you definitely have to check the box on and meet in order to claim this credit. So here's the problem. The more you see these ads, the more you see these emails, the more you see these letters, and we're getting inundated. And if you have a small business, I'm sure you are as well. The whole area, though, is ripe for fraud, because you have to meet certain parameters in order to claim the credit. So they estimate that fraudulent claims of this credit could be one of the largest tax scams in U.S. history. Refer back to the letter that we're reading. They're bragging in the letter that they've recovered over $1 trillion, $1.1 trillion in tax credits. That's a lot of money. And so there are some out there who are saying that this, in fact, could go down as the single largest tax scams in U.S. history. Again, incentive to try and file an amended return, get this credit. If I'm doing it and I'm taking a percentage of the total cost, it would seem to me that there's an incentive to push the line whether you were eligible or not. According to a report, this is a report that was issued last summer by the Treasury Inspector General for Tax Administration. The IRS, by the way, this is as of last summer, had already identified more than 11,000 suspicious federal returns that claimed more than $2 trillion of the credits as of March of last year. That's why many are describing it as perhaps the biggest tax fraud that is going down. Some estimate that the IRS is pulling 90% of its exam staff to audit this employee retention credit, particularly if the Inspector General has identified 11,000 returns that are suspicious, in their words, that claim more than $2 trillion in credits. Folks, stay clear on this one. Now, obviously, there are some businesses that certainly were eligible for that. We all know restaurants closed down. We all know there were a lot of things that closed down, but there were a lot of things that didn't. And so before you jump into this thinking that you're, in our case, going to get $126,000, you better tread carefully, because it is getting investigated, and it is getting investigated at a very high level with a lot of focus by the IRS. So beware, if you will, on that. Certainly something to stay clear of, that is for sure. Got one other follow-up item in this segment as well. You remember last fall, the notion of quiet quitting was all the talk, right? That was the notion that people were just kind of sitting at their desks and not bothering to do anything, and they had sort of quit, but the paycheck was still coming in, so they were going to continue to just collect it for as long as they could. Others were referring to that period of time as the Great Resignation. 47 million workers left their job in the year 2022. So how did it turn out? How's that quiet quitting and Great Resignation going? Well, here's the latest survey by the folks at Payroll Provider Paychex. 80% regret it. In fact, Gen Z, nearly 9 out of 10 regret making the move. The job hoppers' biggest disappointments, according to the survey, the work environment and the work-life balance. The grass, folks, is not always greener. A whopping 68%, according to the survey by Paychex, 68% of people who took a new job in 2022 have tried to get their old job back. That's over 2/3. But only 27% of employers have rehired somebody who actually left. Because the reality is, from an employer perspective, if you tell me you're out the door, if you tell me you want to leave, if you tell me this is not as good of an environment as you thought it would be, not overly inclined to bring you back, right? What's the old expression? Fool me once, shame on you. Fool me twice, shame on me. So not a lot of employers that will take folks back. So some interesting numbers and follow up on some of the surveys post the Great Resignation and quiet quitting stuff that was going on last year. We're going to take a break. When we return, we're going to talk about some of the practical things to consider when thinking about death. Coming up next year on Dollars and Cents with Joel Garris. We're going to talk today about some of the practical things to be thinking about as you prepare for death. The reality is that we don't know our expiration date, and none of us is getting out of here alive. And some of you that know me know that my family experienced an unexpected tragedy at year-end when my sister-in-law, Margaret, is unexpectedly passed away at the age of 56. And so that really does shed light on the fact that we just, we don't know. And it's important to take a moment and to really kind of think about, am I really organized in ways that are going to help those people that are left behind. Now, the good news is Margaret Marley, my sister-in-law, was talking to me over the years. And so she had made some plans. And so things are relatively straightforward. But if you've ever been involved with being an executor or a trustee or whatever the case may be, you know it is a difficult and tricky job. And so there's always things that pop up that make that difficult, even in situations where there was planning to have occurred. And then combined with the fact that you're trying to kind of get together the financial, practical stuff, and then of course there's the emotional side when you lose a loved one, particularly unexpected at a, in theory, younger age than the average life expectancy. So we wanted to spend some time on the program kind of going over some of those practical things to be thinking about. And it's certainly imperative to think about those sooner rather than later because we just don't know. Anyway, my name, of course, is Joel Garris, certified financial planner, certified financial fiduciary at Nelson Financial Planning. Program, of course, is Dollars and Cents, where we help you make sense out of all of life's decisions involving your dollars. Be sure to join us on any of our social media podcasts, YouTube channels. Just go to our website, Nelson Financial Planning. And if you have any trouble finding us, the icons in the upper right-hand corner will immediately connect you over to our particular channel on that platform. So we all know that we're not going to get out of here alive. And at the end of the day, there's certainly some practical things to be thinking about. And we understand it's a difficult conversation. And it's a difficult time after someone passes as well. So it's important, though, to be thinking about some of the practical things that you can certainly do to sort of get the house in order to really help reduce down what is a very stressful time for folks anyway. And then, of course, there's always family dynamics. Every family has one and or has them. And so you want to try and reduce the possibility of conflict as much as possible. So fundamentally, it starts with a review of your current estate planning documents, or in the alternative, you don't have anything to review. That means you don't have any, so you probably at least need to start there. Get a baseline amount, get a baseline plan, at least put on paper, signed, executed, notarized, things like that. In today's world, there's a bunch of websites that are out there that will allow you to log in at any time, put in your general information, and ultimately have some documents that are going to get created that at least will cover you if you don't have anything in place. But some of the things to be thinking about as you think about those estate planning documents is, and this is something that we often see getting overlooked, is you really want to make sure that you are looking at your beneficiaries that you've named on various accounts, because that then becomes what is going to happen to that particular account at that point in time. See, what people forget is that if I name a beneficiary on a particular account, then that named beneficiary is who is going to get that account, regardless of the situation involving what the will or the trust might say. So it's so important that you take and make sure and confirm that the beneficiaries are on everything from life insurance to your bank account to your IRA to your 401k to your house. Any of that you can easily put a beneficiary on. Now, again, that's just a practical tip. Do you want to necessarily name people outright as your beneficiaries? A lot of cases, that's perfectly fine. In other cases, though, you may want to put some restrictions on it. That's where a trust comes into play. The more you want to kind of put some restrictions on what's going to happen after you pass, then the more you want to have a full legal document, generally thought of that's the function of a trust, that ultimately you use to help produce the game plan for how that money is going to get distributed after after you pass. So, but it starts with a review of the beneficiaries and making sure that everything. And I'll tell you, the number one thing that people miss is their bank account. They just forget to do it. Maybe it's a little bit more cumbersome to do it with the bank because you actually have to go in and go on site. But that's the number one thing that people miss. So make sure the bank accounts have that beneficiary designation on it in order to avoid probate. Next is you got to think about the tax laws, right? I mean, that's got to be on your mind no matter what, whether you're living and you pay taxes. Well, when you die, I'm probably going to pay taxes as well, particularly your beneficiaries if they're inheriting retirement accounts or anything like that. So is there a way in which the tax laws have changed that would adversely impact you in particular? We've certainly talked about this in previous shows where the elimination of the stretch IRA is probably the single biggest change that has happened in terms of taxes and inheriting. Next up, you would say, okay, well, have I named the right decision makers? Have I named the folks that are serve in a fiduciary capacity, in a trustee capacity, or an executive capacity? Are those the right people for the job based upon where I am? So it's important to kind of really be thinking about the decision makers that are going to occur, that are going to be around making those decisions along the way. And then, here in Florida, welcome to Florida, right? A lot of people moving in. And so it's important to also just kind of make sure that what you have, maybe something you did in a different state, is still valid here in Florida, because the laws can vary from state to state. So that's certainly something that you want to check out. Another thing, and this is important, and we've seen it. Some people do it, and some people do it really usually pretty good. Oftentimes it's like engineers and accountants and stuff that like assemble this stuff really well. But this piece is something that anybody can do. It just requires you to sit down and do it. And so we like to think of it as assembling sort of a to-go list, if you will, or a fact book of important information that you can leave behind, that you can direct someone to say, hey, if you go here, you will find a binder. In that binder, you will find everything that you need. People to call, the accounts, the account numbers, who to call for the particular accounts, all of that. For example, my dad has shared with me exactly where that binder is in his house. So I know if anything happens to him, look for the binder, if you will. But it amazes me how few people actually take that step. So what should be in that binder? Well, it's important to provide the names and the contact information for the players that are in the game, right? Because whether that's your tax preparer, your financial advisor, your attorney, your accountant, your banker, your insurance agent, all of that needs to be in that book. Who's your pastor? Who's your funeral director? All of those kinds of things with their names and contact information. Good to assemble that all in one location. So that fact book is pretty important in terms of listing in one location the folks that you need to contact when something happens. Now, there's a whole bunch of other stuff that needs to be in that fact book as well. And we're going to share that when we return after the break here on Dollars and Cents with Joel Garris of Nelson Financial Planning. Talking about some of the practical tips that you can do to plan for your eventual passing. It always surprises me how little sometimes people think about this, but there's certainly some easy homework that you can do that ultimately puts you in better shape. Before the break, we were talking about, at the very least, checking out those beneficiaries on your various accounts, checking the estate documents. And if you don't have them, there's simple ways to get them. There's online platforms that exist that allow you to download and choose whatever the documents are that you need. Typically, it's a will, power of attorney, things like that at least gets those documents down on paper. And then making sure that you're naming the right people, right? Is the executor who you really want it to be. So those are certainly some things to be thinking about. In this segment of the program, we're continuing the conversation about that fact book and why it's so important to create one and leave one behind. And let people know where it is. Before the break, we were talking about the first thing that needs to have is to have all of the names and contact numbers of all of the professionals in your life, whether it's your pastor, your accountant, your lawyer, whoever that might be. That's the book to have so that people know who it is and, more importantly, how to contact them. So that's the first piece of the fact book. But there's other things that should be in that fact book, and we're going to get into those in greater detail here in this segment. So this, of course, is Dollars and Cents. We're one of Central Florida's most listened to radio programs, coming to you on a host of stations throughout the Central Florida region. Also happen to be one of the top 25 financial planning podcasts on the World Wide Web. So make sure you check us out on your favorite podcast platform of choice, or you can check us out on our YouTube channel. My name is Joel Garris. I'm a certified financial planner, certified financial fiduciary at Nelson Financial Planning, where our team of great folks, all of which are certified financial fiduciaries, stand ready this week to help you change your life with a successful and cost-effective financial plan. So talking about that fact book, you got all the names, the numbers, all the contact information of all the professionals in your life, but then it becomes, what next? Well, how about the location of all of your original documents, whether that's your will or your life insurance policy or annuity, business agreements, things like that. All of that then would be spelled out in terms of where they are located, along with information about online access. And the rules are kind of a little different here. Every website's privacy policy is different, but suffice it to say that it certainly is helpful if you have the online account information, the website, the password, all of those kinds of things. So often we are living in a highly digital world. It seems like we've got a slew of logins and passwords and things like that. It certainly, though, makes good sense to have that also written out for folks to be able to address and figure out where things are at the same time. Similarly, in this fact book, probably a copy of the prior tax return for the prior year, along with your CPA's contact information, of course. But that will help be a guideline for folks that are trying to track down things that may be there in your total picture, particularly after you're gone. And the tax return has oftentimes a lot of hidden gems, because if you've got an bank account somewhere that's paid a few dollars worth of interest, well, that's going to show up on the tax return, and that's going to help that person realize, hey, wait a minute, there was something here last year. Where is that? Maybe there is an account at this other institution that I need to track down. So that's why it's important to include a copy of the tax return in this particular fact book. The other thing to be thinking about is, remember who does what and when. And this is important because a lot of the folks that you name, or a lot of the documents that you typically hear associated with estate planning, power of attorney, healthcare surrogate, living will, all three of those documents are no longer valid once you pass. Those are all documents, power of attorney, living will, healthcare surrogate, that are intended to give someone the ability to make decisions for you, because you are not in capacity to be able to do that. But when you pass, there ain't no capacity one way or the other. And so all of those documents end. So make sure that you're naming the right people and know when they get to operate and when they don't. So whoever is the power of attorney, that is someone who's going to be making decisions while you're alive. Whoever is the executor, that's the person that is going to be making decisions after you are gone. So important to kind of know the difference, who's doing what and when, because all of those documents, power of attorney, living will, healthcare surrogate, they all expire at the time of your passing. So make sure that you've got an understanding and a handle on who that is and why. Similarly, a lot of folks will try and do some prepaid funeral or at least do some planning. Have that discussion of what you want. Where do you want to be buried? If you want to be buried, where do you want to be cremated? If you want to be cremated, do you want the ashes scattered? Those types of things in terms of those decisions. And the reality is these aren't fun conversations to have, but if you have them, they will take a highly stressful time and make it a little bit easier, because people will know, hey, that's in essence what this particular person wanted to do when they pass. Yes, they wanted to be cremated, or no, they wanted to be buried. All of those things wind up getting addressed if you're writing them down, putting them in the fact book, discussing them with your loved ones. It's certainly important to do. Similarly, hospice care is one of those things that typically comes in towards the end, particularly when folks are struggling with those types of illnesses that ultimately are terminal. So those are just some of the things, and obviously, as we shared earlier in the program, going through that on a personal situation, given that our sister-in-law passed at the end of the year. And so those are some of the things that we are experiencing firsthand, and we wanted to spend some time on the program sharing those with you. Some of the things that you can do to kind of make things easier. Make sure that that fact book is up to date. Make sure it's got a copy of the tax return in it. Make sure it's got all of the current professionals that you use along with their contact information, so that you don't have to spend time trying to track things down. Double check your estate planning documents. Make sure they're all in good order. Make sure you've named the right people based upon kind of where you are in life today. And then, most importantly, double check the beneficiaries that you have named on the various accounts. This one, as we said earlier in the program, is one that gets overlooked all the time. Oh yeah, I did a trust, or oh, I signed a will. Well, yeah, that's great, but you have to have the beneficiaries that are named on things like retirement accounts, on insurance, on annuities, all of that. It's got to match. Otherwise, if it doesn't match, it doesn't matter. Whoever you name as a beneficiary on a particular account is going to be who winds up getting that money when you pass, regardless of what your will or your trust says. So it's so important to take the time and go through the beneficiaries on these various documents, because that is where the money's going to go, regardless of what you said any other place. Well, that's about it for this week's episode of Dollars and Cents with Joel Garris of Nelson Financial Planning. If you like what you heard and want to learn a little bit more about how our team of certified financial fiduciaries can help you change your life, visit our website at nelsonfinancialplanning.com, or call the office, 407-629-6477. We still have live humans who answer your call when you call in. Enjoy the rest of the Sunday. This has been Dollars and Cents with Joel Garris of Nelson Financial Planning.